Every ADU loan I've ever seen basically has the same Achilles heel. It's this one weakness that makes them almost inaccessible and useless to most of the homeowners I work with. That is until now. Hallelujah! I've gone to lots of different lending institutions and examined a lot of different products and sat through a lot of 60-minute webinars that could have been 5 minutes. And the gist of it is almost all of the traditional lending products are basically the same. They're either a refi, or a second position mortgage or HELOC, or a construction or bridge loan. All of them require a substantial amount of equity in order to get the amount of cash you need to build an ADU, and all of them have the same shared weakness. And there's a reason for that weakness. We've actually built it into the system because we regulate these banks. We don't want them to hand out mortgages to people who can't afford the debt. A concept that was explained in The Big Short much more memorably than me by Margot Robbie in a bubble bath.
These risky mortgages are called subprime.
But we're going to talk about how this very reasonable rule for primary mortgages or renovation loans is now kind of a nonsensical challenge that faces every ADU development project and prevents a lot of them from ever happening. And then we're going to talk about how Redwood Credit Union is developing a loan product that's going to get all that money out into the ADU market in a safe way. Because there is a new ADU loan available that is going to open up ADU financing to thousands and thousands of Californians. It's the most innovative loan that reaches the farthest that I've seen in California so far. And it originated here in Napa, right in my backyard. Of all places, just a reminder that it's a small world. It started with this credit union, which by coincidence is my credit union, in collaboration with a nonprofit called the Napa Valley Community Foundation. And their fate and mine have been intertwined for many years, since I was a wine guy before How To ADU. So very weird, coincidental, small world vibe. And I'm so proud of them for putting this loan together. I've interviewed people at Redwood and the Napa Valley Community Foundation, attended multiple webinars, so I'm gonna distill it all into a much shorter video so you can kind of glean the important bits and decide if you want to look more into this loan with the link in the description below. The really exciting part about this is that Redwood Credit Union has a huge reach around the Bay Area. It covers 8 different counties. And if you aren't in one of those counties, you should send this video to your favorite lender to see if they can investigate building a similar type of loan, because this is a concept that could work anywhere in California. This is a pretty far-reaching loan. It covers Napa, Sonoma, Marin, Lake, Mendocino, Contra Costa, Solano, and then San Francisco, city and a county. The Achilles heel of almost every lending product out there is that they don't count the value of the accessory dwelling unit or its rental potential when they're calculating the risk of the loan. When a bank gives a homeowner a loan, it's generally secured against the value of the house. And one of the basic parameters that the bank or financial institution is going to check is the loan to value ratio to make sure that that homeowner isn't already in a ton of debt. Most mortgages are going to go right up to 80% loan to value ratio. So if you've got a $500,000 house, you can have $400,000 in debt. But if you already have that $400,000, it's unlikely that a bank's going to finance your project. And this is actually a great thing, because we don't want banks handing out money willy-nilly with a bunch of subprime loans. But the silly part when it comes to ADUs is that the ADU doesn't count towards your equity until you don't need the money anymore. When you build an ADU, you're creating a bunch of value, but that value isn't going to get counted towards your loan to value ratio because it doesn't exist until the project is already done and the money is spent. So Redwood Credit Union said, hold on, this isn't that risky. 90% of ADUs are going to finish within X months of receiving the loan. So at the point where it's finished, it's secured against the value of the whole property, including the ADU. We just need a little bridge to secure the loan while we're drawing on the money for the construction costs. This isn't like a normal construction loan where they draw the money, they build a pool, and they don't add that much value to the house. And on average, 99% of these projects are going to finish within X months, on budget and on time. I thought this would be a quieter place and more pleasant place to discuss some of the nuances of this lending innovation. We've been walking around banks all day, but this is my favorite bank in Napa because it's been converted into a restaurant and bar. So the silly thing is, Once you finish the ADU, you're adding hundreds of thousands of dollars of value to your property in California. You're adding rental income to your property in California. But until you've done that, until you've finished, you cannot count that value toward the equity of your property. And that means you can't usually access all the money that's locked up in your backyard right now. What's cool about this Redwood Credit Union product is that it's an as-complete loan. It will count the future value of your ADU and rental income when calculating the risk of the loan. You can get finance even if you're already at 80% LTV of your current property for two reasons. One, they'll go up to 90% CLTV, and they'll count the future value and rental income from the ADU. So all of a sudden you can access a lot more capital. That lets you finish your project. To do that in a safe way, they still have to secure the loan. You do that by working with a local nonprofit called the Napa Valley Community Foundation. The NVCF has a big pile of money that secures your loan between the time when you get the first draw and the time when you get a CO on your ADU. And they do that over and over. As soon as you're done with your construction, now it's the equity you've created that secures your loan, and they can use the balance of that big pile of money to secure somebody else's development project. So now for the loan details. It's a 20-year fixed rate loan. The rate's 4.375%. It's a 1-year interest-only draw. It's a second lien, so it's not gonna touch the metrics. If you have a really good mortgage rate already, which a lot of people refinanced recently, you don't have to mess with that. And you could tap up to $300,000. That's the normal limit on the construction loans from Redwood. I don't know if there's much more strategy to that. Like, I don't think that part's essential to the thing penciling. That's just one of the default limitations. And it applies to 8 counties. The other kind of perk, which is also a challenge for some situations, is that Redwood Credit Union is gonna manage your funds throughout the project. So that means they need to have a fixed rate contract with the GC up front before they approve the loan, and then they're going to do inspections throughout the process and pay everybody as work is done. So it's really above board. For a lot of people, that's a feature, not a bug, but it does mean you can't make any kind of cheeky deals with your cousin, right? Like it does limit you to what you can do. Most contractors understand the system. Some contractors won't want to work that way. Now there is always a catch, right? Like, one of the tricks about this specific construction loan is that you already need to have a building permit and planning approval for your project, which means you already need to have gotten plans drawn up and gone through all the application process and fees. So to combat this, you can actually go to Redwood early in the process before you've done all that and kind of get pre-approval on how much you can afford, and then use that to develop your plans in a way that you know is going to meet your budget. So if you're ready to do that, contact Sean Charter, information in the description below. Now that you know about this amazing loan, what you have to learn is how you turn that into a budget, and turn that budget into a design, and then value engineer that with a builder, and then go back to the loan and iterate back and forth until you have a finished project that's feasible that you can really accomplish. This video is going to teach you how to do exactly that and talk you through those first steps. Thanks so much. Let's build a lot more housing. Thank you so much to my friends at the Napa Valley Community Foundation and Redwood Credit Union for putting this amazing loan together. Let's build a ton of housing.
Going to a lot of banks now.